45 seconds.
Live on Facebook. What's up, Facebook?
Biblical foundation I received from
I am
CBS is the
back in the saddle again, so to speak.
my decision making and communication. And to God
So,
be the
welcome everybody.
The College of Biblical Studies is regionally accredited and currently accepting applications for the fall semester. Apply online at cbshouston.edu or call us at 713-77-BIBLE.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership
But-
of the station. It's time to get on the right path.
Oh, man, that was not a good
Real
time to...
Estate Radio with
Okay.
Tom Perry.
But it should, sorry.
Right.
We answer your question that's keeping you from taking action and succeeding today.
Welcome to the show. Please come inside. Ladies and gentlemen.
Get ready. The guide that will
All
put your
right.
fears
Oh,
behind
Jennifer,
you
she's
is
on her
the
cell phone
air
in her
now.
car driving to a closing, so
Okay.
just in case the
Yeah.
call drops or something.
Sure, yeah.
Toll free 877-881-0271. Now here's your host, Tom Perry.
All right, hot mics.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817. We're a call-in show if you want to have questions answered about your retirement, about your better future, about real estate more specifically. You know, one of the things that we talk about here at Right Path, we're practical real estate investing. We get you on the path to a better future. And we always say that you're in business for yourself, but not by yourself. We have a team of people that are ready, willing, and able to help you get started or continue your journey. And want to share one of our valuable team members on the air with you. She's joining via our call-in hotline. She's in traffic right now, as I understand, going to a closing. Jennifer Hernandez, the Hernandez team, Legacy Mutual Mortgage. Welcome to the show. How are you?
I'm good. How are you doing?
I'm doing very well, thanks. I'm trying to get my computer to populate so that I can actually get on Facebook, but man, it is just going slow. I don't know why it's going so slow. So, what's new in the world of mortgages?
We're just cruising along. We still see lots of buyers. I've got lots of buyers out there. I just feel like right now I'm getting a lot of people that have credit issues that during Harvey, and I think we talked about this last time, but I'm going to talk about it again.
Yeah.
I keep seeing it. They, were on what they think is this program that helps you out on your credit, but then the bureaus are getting late payment reports. So they'll have one or two late payments, and then what the client will tell me is they'll say, oh, well, I was on the Harvey relief. And I said, I know, but I can only deal with what's being reported, right? So they've got to call the creditor, try to get it removed. I mean, it's just a pain. And for some people, a late payment on anything, a credit card, a car, a mortgage, anything really within the last 1 year is like a bullet to your credit. It literally will drop your credit like 100 points overnight.
Wow.
Any kind of derogatory. Yeah, 100 points. And if it's within 1 year.
Yeah.
And so we're just seeing a lot of that, and it keeps people from moving forward, which is really
So how late is late? So in the mortgage world, how late is late on a payment for, let's
30 days.
30 days.
If you pay 30 days late, like if you're struggling right now with bills,
Yep.
do everything you can literally to pay like on the 28th day, because if it goes to that 30-day period, the creditors, there's no human, it's the computer that just turns you in.
Right.
They're just like, oh.
It's automated. Yeah, there's not like a human being saying, "Oh, you messed up." So if your mortgage payments due on the 1st, right? This kind of like, landlords think of it differently. Due on the 1st, late on the 3rd, right? And but with mortgage payments, you have a little bit more grace period. So it's due on the 1st, might be late on the 10th or 15th.
Yeah, it's late on the 15th, and you'll pay a penalty,
Right.
like a late fee.
Sure.
If you let it go to the 30th day, like if there's 31 days in July,
Right.
you've got to pay it on July 29th so that it credits overnight and hits on the 30th. Because if it goes to that 31st day
Yeah.
after the due date of the 1st, you are snowed. And you can't, and they won't remove it. You can't call and get some nice grandma on the
Can't
phone
say
and
pretty
finish
please,
your story.
sugar on top, all that.
Yeah, no.
No.
They won't do it.
Yeah.
Won't do it. And so we're seeing a lot of that. So we're seeing a lot of tarnished credit. And
How much can credit jump up in a month?
How much what?
How much can credit jump up in a month?
I mean, we have seen people get stuff removed like a collection, and have seen it jump 100 points.
Wow.
So if you get derogatories are the longest bullet, like literally. I mean, I'm not exaggerating about the 100 points. 100 points, and it just never fails. There's some kind of weird karma out there that I'll pull the credit, and sure enough, 2 months ago they were late on a payment. I had a guy that a year ago we pulled his credit. He's been looking for a house for a long time, and a year ago we pulled his credit. He was 730, which is fine.
Yep.
And I re-pulled it because he just found a house, and he's 620. He's 628, and it's because his car payment showed a late payment in May.
Wow. And so because of the recency of that, right? That's going to have more of an impact.
Yeah, because the rest of his credit was pretty much the same. Nothing really had changed other than that. And so, he's not going to be able to get it removed. Luckily, he's putting 20% down, and instead of a 4.875 rate, this is on a primary residence, he's getting 5.625. So, I mean, we can do it. It's just his rate's not great. But
Yeah.
he's like, my wife is pregnant. I need a house. I don't care. I'm like, all right, whatever.
Right.
So, but,
And he can probably refinance in a year or two, right? Something like that.
Yeah, if the rates are conducive to that, yeah, sure.
Right. And
That it can refi. So,
and heck, we might be looking a year from now and saying, "Wow, that's a great rate."
yeah, exactly. Whether you're an investor or especially when you're an investor, credit is definitely key. Because if you're below a 720, it really makes a difference. Investment property, at least on a conventional loan, if you're wanting long-term financing, we've got to pull the credit now, and then sometimes we can advise on making some movement. Sometimes it's as simple as paying down a credit card, and that's 30% of your score is credit card debt. So you can get 40, 50 points just by paying down a credit card that might be maxed out. And so we want to, as early as possible, pull your credit just to get the baseline going.
Right.
And so I just encourage people to definitely do that, and let's just look at it where it is. Because all this online stuff, I know my credit score, I get Credit Karma, I look at Credit Karma every single day.
Yeah, Credit Karma's the best, aren't they? No, I'm just kidding.
People are addicted to it. It's similar to like social media.
Right.
They're as addicted to their credit score.
Sure.
Which is fine, and that's great. And those online scores are a good indicator of credit health. Okay, but
Yeah.
they are not. If they're not using the FICO Classic 5.0 model,
Yeah.
that's the algorithm that mortgage companies use, and our credit score is oftentimes different.
So I can't imagine that you haven't looked at Credit Karma. What algorithm do they use?
You know what? I think they use FICO because someone sent it to me and it said at the bottom FICO.
Okay.
But it didn't say what version.
Ah.
The credit score was like 30 points different. And so what happens is Fannie Mae and Freddie Mac come out with a guideline. And
Right.
they say, for us to buy a loan from you,
Yep.
you have to be using this most updated model of the FICO score.
Sure.
And if mortgage companies aren't using that model of the FICO score, then they're not going to get their loan sought. So we have to do what Fannie Mae says. So it's constantly changing. And so, just get with a mortgage company, let them pull your credit. I mean, I give my clients the credit report, and I want them to know, and then we talk about ways that they might be able to make movements. So not all the online stuff, and especially, like I said, when you're buying an investment property, 720 plus is the key. I mean, I had a lady I think our credit score was like 680, and we can still do the loan, but we have to charge her 3 points, which, I mean, I don't really want to do. I don't want her to pay 3 points on a $200,000. I mean, that's a lot of money. It's prepaid interest basically, but it's like, yeah, we'll do the loan, but you got to pay all these upfront points when your credit score is tainted.
Right.
Like an add-on, it's a penalty. It's like a penalty.
Yeah, that's no fun.
So,
Penalties are not fun.
Yeah, so it's really, really important. Yeah. So if you need to reach me, my number is 713-579-3611 is actually my direct line, 713-579-3611. Email is jennifer.hernandez@legacymutual.com.
That's fantastic. So are you seeing people going after flooded houses that have been rehabbed? Are you seeing people avoid those? What are your buyers telling you about shopping for houses? Are they considering those a good deal? Are they considering those like must avoid at all costs?
I do have people. I have a gentleman I'm talking to today that is moving his family, and like for his primary residence, he's buying a flooded house, and they're going to fix it up. We're going to do the construction loan and rehab and all that for primary. And so there are some people that aren't shying away from it. There are other people that are, of course. I mean, it just, if you get a whole pool of people together, you've got a bunch of different answers. But we are seeing people that are, yeah, for sure. So there are options for that. I don't do any investor, hard money. If you're
Right.
an investor and you're trying to fix something up, obviously I point them to hard money. I'll refer them to one of the vendors of the show, and then we can do the long-term financing. When you want to pay off that hard money loan, we'll do the long-term 30-year fixed loan. So.
Okay, so for all your long-term mortgage needs, you need to give Jennifer Hernandez a call. It's jennifer.legacymutual.com, 713-579-3600, or 713-579-3611 is her direct line. Hey, Jennifer, thanks for coming on the show, and be safe going to that closing.
You're welcome. Thanks for having me today.
All right, have a great day.
See you later.
Mike's off.
All right, Ashley's here. I'm going to go get him.
Okay, perfect.
All right, thanks.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out
it was
the
raining
simple
every day,
steps
so
to
we
get
couldn't
started.
we couldn't
I'm
go there.
Jennifer Hernandez, the Hernandez
Weather was
team
atrocious
at
'cause of the
Legacy
hurricane.
Mutual Mortgage. Jennifer.legacymutual.com or call
Hey, like I said, no editing's required.
713-579-3611.
I'm just dying to see what they
Again,
look like. I mean, I've seen pictures of them before,
Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS
Holy shit.
514497.
Equal housing opportunity.
Holy
NMLS
shit.
514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling
Plankton.
specializes in turnkey remodeling of
Holy
single-family
shit.
investment properties. Whether it's a flip rehab or a rental rehab,
Holy-
we
did
manage
you get
every
to touch it?
aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our three
Yeah, you don't wanna
keys to
scare 'em.
success. Use a detailed
Holy
scope of work
crap.
so that everything gets done. Train and maintain quality
How many of
crews
you
so
all
it
were
gets
out there
done
doing
right.
it?
And complete the work in a proper order so it gets
Cool
done
deal.
fast.
They
No more managing it
you'll have
yourself, no
several
more doing
boats
the work yourself.
all going to
Fast
this
Track
place. And there's
Remodeling
probably
really
300 or
does manage it all.
400
So give us a
of
call
those.
today at
You're not seeing. I mean, I never saw more than about
832
3 at any one time. And so what
Again,
happened?
that's
Like then he'll swim off, and then your turn basically is
or reach
up
us on the
when
web at
you lose track
fasttrackremodeling.com.
of that
Did you
fish,
know
will.
that
right?
there are over
Then
24
on our
trillion
boat there were
dollars
8 people
in
on the boat,
retirement
but there's
accounts
probably
in the
20
US?
boats in
Imagine
the area.
if you
But it's a
someone's
really
IRA
big
to
area,
fund all of
so
your deals.
like the next
Well,
time,
you can. Quest
and
IRA
I'll,
is
I
based
can show that.
locally
I
here
don't know
in
which one that
Houston,
is,
Texas.
but
At Quest IRA, we offer retirement
yeah,
accounts
it's
that can be
it's
used
crazy.
to
I mean, it
invest
was
in real estate,
much was it?
promissory notes, private entities,
so
and much
I don't
more.
know
Many
how
of our
much that
clients
was
loan
because
money
I
from their
paid. Do you remember
IRAs to fund
Soraya
real estate
on
deals
Taveros?
all
Yeah.
over the country.
Yeah.
We
So
don't sell
Soraya
any
put the trip
investments
together.
or give
She lives in
advice.
Florida
However,
now.
we do hold
And it was
free
me
networking
and
events,
a friend
weekly
of hers
educational
that's a
classes,
retired
and free
urology
consultations
medical
with an IRA
surgeon.
specialist. For more information,
and he
visit our
does, he
website
retired
at
from surgery and does,
questira.com or call us at
hypno medical stuff.
Really?
1-855-FUN-IRAs to tap into the
Lots of stuff with
$24
hypnosis
trillion in
And
retirement
travels around the
accounts in the
country,
U.S.
travels to Atlanta,
Call
and
Quest
so he
IRA
lives north of
at
Fort Lauderdale, and she lives just north of Miami.
1-855-FUN-IRAs
And,
or go to our
so
website,
she charged $1,500, and that basically
questira.com.
paid for everything except for dinners.
Hi, Clint Coons here,
And that was
attorney and
not
avid
airfare.
real estate
So,
Okay.
All right, guys,
hotel
1
for
minute.
greatest mistake real estate
5
investors
days, 4
make
nights,
is not
there was
understanding the potential
breakfast,
liability that exists
there was actual
from
hotel
owning
in the
real
island.
estate. At Anderson Business,
it's
Legal,
a-
and Tax
I mean,
Advisors, we specialize
it's a
in
small
protecting
hotel,
real estate
very
investors in
family
all 50
run,
states.
you know, it's
in
like
addition to
18
structuring your
rooms.
business for optimum
It's,
protection,
you know, a
we
3-story
provide
with a
guidance so you pay
rooftop,
the least amount of taxes
swimming
available
pool
under the law.
deck,
We have
actually,
150
sun-
employees
it
that
had a
range from
swimming pool.
lawyers
Hey,
to
Tom.
CPAs to estate planners and much more.
Are we ready?
Download a free ebook,
We got
The
20
Immovable
seconds.
Okay, good.
Hello,
All right.
Nikki. How you doing?
Does he need to go up,
Good,
down,
how
or
are you?
down to the
Hold on,
little?
talk, Ashley.
Hey, hello, hello.
Down a little bit.
Okay, got it.
706
All right, keep
It's
going.
my imposing man voice.
Yeah, right.
My
Yeah.
Star Lord voice.
Yeah, right.
Is you seen the new Avengers?
Yeah, of course.
Is your voice down in octave? No, it's not.
Right Path Real Estate.
So how's he know? How's he know?
We're good.
All
Okay,
right, cool.
excellent.
This is Business
We'll
1110.
go to that.
All right, gentlemen. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Did a quick change during the break. I'm joined live now in the studio with Ashley Patten, Patten Law Firm. How are you, man?
Hey, doing well. Tom, thanks again for having me. I always enjoy the show.
Absolutely. We have a good time here. Give a lot of good information for new investors, for experienced investors. Hey, I always like to talk about the problems that investors face, as well as what a new guy is going to look at. And then we're also shifting our focus somewhat. You know, what we recognize is that if you look at the plight of most Americans as they're reaching a retirement age, you know, it's amazing to me how many people that we talk to that are, you know, early 60s, mid 60s, and they're like, you know, I'm kind of in catch-up mode because I'm just now realizing, Jason's been talking about it recently, that, you know, if you're just going to have money like in a 401k or traditional IRA, things like that, you need 25 times what you want to be your annual income. So if you want, you know, $10,000 a month of income, that's $120,000 a year. You need 25 times that. Roughly like almost $3 million, right?
Right.
Set aside in savings, and most people are like, well, man, I've got, you know, $400,000. I'm a little bit behind. I got to save $2.6 million over the next 6. You know, good luck with that, right?
Right.
You spent 40 years saving. You know, you're 62 now. You started working when you were, you know, 16. You've saved 400 over 40 years. Now you want to save 2.6 million over 6 years, right? I mean, the odds of that happening. So, but what we know is, when you look at the kind of rates of return you can get in the market, I mean, you and I both probably have friends that have money in the market and are like, oh, man, I made 14% last year, which is great. Or I made 19%, which is fantastic. But what's the level of risk that they took on, right?
That's exactly right.
I mean, you know, if you have one, you could lose 30, 40% in 1 year. And people don't realize is if you lose 30% 1 year and then you gain 30% the next year, you're not at even yet.
No, you're broken even, and then you lose out on normal appreciation costs. So
Right.
You're actually behind the game.
Absolutely. So lose 30%, go from 100,000, lose 30%, now you're at 70. Gain 30% on 70, you're at like 91. You're still $9,000 in a hole, right?
That's right.
But people, you got to make like 40% to make up for the 30% loss, right? Because you've got less capital at that point. Well, but in real estate, you really can play catch up. Because if you're flipping houses, you've seen some big checks, you know, some chunks of money when people have
Every day.
right. So what kind of money have you're on the title side? You see these checks. I mean, I'm sure you've seen $50,000 checks. You've seen $75,000 checks. You've seen, man, it doesn't take a ton of those, and you're playing catch up.
Oh yeah. We closed an apartment complex about 2 months ago. That was a $29 million deal.
Yeah.
And they're rehabbing it, and they're going to flip it for about 34 to 37 million.
Yeah.
And so it's just, I mean, as you get bigger, obviously you take more risk.
Right.
But you're leveraging other people's money.
Right. And that's the thing we talk about a lot, that appreciation right now. People don't realize, if I go out and buy Exxon stock, in fact, I could probably pull it up right here on the computer. When I checked it last, I remember checking it about 3 months ago. It was at $87 a share. And then I pulled it up again. And let's see, Exxon stock. And I remember it was like, here it is, 83.89 a share. So 83.85, and it'll fluctuate just a little bit as we're going along. So if I'd have bought it at 87, I'd be down $4,000 right now. But not only that, I would have invested $87,000. I can't go to my broker and go, I want you to lend me 80% of that $87,000, and I'll only put 20%. But with a house, you can do that. I can buy a $150,000 house, only put 20% down, $30,000, and you've seen deals with hard money and then refinance out. They've got little or no money in it. But worst case scenario, even on a passive deal, you could have $30,000 in, but you've leveraged a $150,000 house. If that house rises in value 7%, that's a leveraged 7%. You're leveraged 5 to 1. That's really a 35% rate of return on your $30,000. I mean, you see this every day, don't you?
Every day. And the thing about stock markets is if you do go in what's known as the margin, right?
Right.
Most stock brokers can lend 50%
of whatever you get, right?
Of whatever you have.
Right.
So, but if that account ever slides down,
margin call
every day, you open up the mail and out comes a big blizzard of margin calls. I mean, just every time I get a letter.
Yep.
I mean, in college I did that. I went that way, and
yep.
I remember opening the door one time and it could not even open because it was so stock full of, because
those are good times, weren't they? Margin calls.
I didn't appreciate it. But the thing about real estate is real estate goes down.
You don't get a margin call.
You don't get a margin call.
Right.
I mean, as long as you pay your mortgage, you're
right.
good.
You're
your
good.
Taxes, you're good.
Right.
Your HOA.
If you have one.
If you have one, you're good.
You pay your insurance too.
Right. Your insurance. Of
yeah.
course. If the house isn't burned down and you don't have insurance, hey, it's like a parachute in an airplane.
Right.
You only need it when you need it.
Right. If you're jumping out or the plane's going down, right?
Exactly.
Yeah, right.
But you better have that. And if you're an investor, an ounce is worth a pound of prevention. So
yes.
always insure your property.
So speaking of insurance, most people don't realize that that's really what title is.
That's exactly right.
You're buying an insurance policy. So talk a little bit about that. How, in the grand scheme of things, why would anybody buy a piece of property without title insurance?
Well, you buy it. I mean, you're playing craps, the roulette, or playing craps or roulette, and just letting it all ride on 00. It
could hit.
I mean, it could hit, it could not. I mean, but statistically, only 4% of the policies end up with the claims, but those claims usually are
96% of transfer of deeds and all that have no issues, but
no issues.
4% of them. That's the claims ratio.
That's the claims ratio, and there's a lot of other sub issues. Like for instance, we got to write tax checks all the time because tax office either A, they roll back something that was after the closing, B, they miss a sliver of land. And title policy covers all that, and so it also covers like I said, rollback taxes. It covers even gap filing. So a lot of times you'll have things filed in the gap to where you pull a run and you see everything filed, but the problem is by the time you file something real property records, official records, it may take 6 to 7 days for everything to be indexed so where it could be looked at by the public. So once it's filed, it's deemed filed. And title policy will actually protect that gap because, inherently, if we issue a commitment today, it's going to have an effective date 7 days ago or 6 days ago, 5 days ago, depending on the county.
Right.
Harris County is a little bit quicker. Brazoria is a lot slower.
Yeah, thank goodness Harris County is pretty quick, right?
Yeah, they're about 5 days.
Yeah. But other counties, man, they're...
You go to Deaf Smith County, which I hope there's no listeners out there from Deaf Smith, but you go there, they may be a week and a half behind.
I'm a native Texan. I've never heard of it.
Yeah, it's
a hotbed of real estate activity, huh?
It's either Deaf Smith or Jim Hogg County, one of those two counties.
Yeah.
Where the owner of the title company was the mayor.
Yeah.
Whose brother was a judge. And from 12 to 1 o'clock, they took off every day for lunch.
Yeah.
I mean, the office was shut down. And Friday at 1 o'clock,
guys got to have a nap. Why are you hating?
Hey, I wish I could do that. I wish I could do that.
Right. Okay. So what are some of the big mistakes that you've seen recently? Anything that you've seen an investor do that you're like, oh man, if I'd had a chance to put my arm around him beforehand and say, don't do this. What did you hear? What?
Quite frankly, the biggest thing is this happened 2 days ago. Investors who don't give their option money to the seller.
Oh.
Timely.
Ooh.
You have 72 hours to do that. If you don't do it in 72 hours, they can take your credit. They can take your $100, $200.
Yep.
But they don't have to give the right to rescind.
Right.
And a few of our hedge fund clients,
oops.
They missed one.
Yep.
And they have, they're closing 30 loans a month through us. And,
right.
They missed one. And, of course,
they wanted to back out of the deal during their option period?
And
earnest money went hard.
It's a typical thing where every day in the option period, they, I don't want to say slam the buyer or slam the seller, but they basically give them a list saying, hey, either do this, or take off this much for the price, or we'll cancel the deal.
Right.
And so they did that, and the guy basically called their bluff and says, we'll cancel the deal. And they're like, well, we're canceling. It's like, well, there's no option money, so I'm going to sue you for specific performance.
Yeah.
And they're involved in a lawsuit.
Nice.
And the seller's going to probably win. So because they weren't protected by the option period and they were doing cash offers.
Yeah.
So if you have a cash offer, make sure you follow the option period strictly. And time is of the essence.
Now, we don't do option periods when we're buying houses. And the reason why, because we've done so many.
Right.
And so I wouldn't recommend that for a rookie investor.
I would not
That's an
recommend that
advanced
either.
strategy. But it gives us an advantage if we're going against a rookie or a hedge fund that says, hey, I want an option period. Because they want an inspector go out. Because they're dealing, they set up a process. They're spending other people's money, right? We're spending our own money or our private money lender's money. And because when I walk a house, I've seen a few houses,
right?
And
you've seen more than a few houses.
You've seen a few thousand, and or LT. LT's one of our acquisition guys, and he's seen more than I have. I mean, he's been doing it 25 years, right? And so when you walk that many houses, you can walk in. You don't really need an inspector at that point. But we recommend that any new investor get an inspection done, and it's important. You've got 72 hours from the time that the contract's signed. And the option money's got to go directly to the seller. Now, typically, earnest money goes to the title company, and it sits in escrow until the day of closing.
That's correct.
But option money doesn't.
It goes directly to the seller.
Right. And if you ever read a TREC contract, it's very specific in the language of exactly what happens. And all that happens is that earnest money is not. It goes hard immediately if the option money is not paid to the seller within that 72 hours.
Well, the whole thing about earnest money, and the new contracts are starting to address it, but the whole thing about earnest money is just because there's earnest money doesn't mean there's not a contract.
Correct.
So the seller has got to notify the buyer to deposit the earnest money, and then at that time, if the buyer doesn't deposit earnest money, then the seller has the right to cancel.
Correct.
Just because the earnest money wasn't tendered doesn't mean the contract is void.
Correct.
That happens all the time.
Yes. All right, so we're going to continue the conversation on the other side of the break. You're listening to Right Path Real Estate Radio, 713-785-1817. I'm joined live in the studio with Ashley Patten. He's with Patten Law Firm. That's plfpc.com, plfpc.com, 713-621-5808, 713-621-5808.
I got sued the other day.
Mike's off.
Oh, yeah?
By this guy, Lenny Jackson, BLE Enterprise. You know him? Anyway, I don't know if he is or not. He filed a public affidavit. Now, he did a $35,000 loan with Trust IRA. He bought the property prior to closing.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Submarine. Oh, got it.
Yeah.
Yeah.
Are you looking for an investor-friendly general contractor for your investment property?
Yeah. You get to deal with an adult, right? Yeah.
Exactly. So, that's basically what I'm doing.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. No more managing it yourself. No more doing the work yourself.
Yeah.
Fast
Yeah, you know why,
Remodeling
right?
really does manage it all.
So give us a call today at 832-742-9992.
Taxes. Just the sound of that word makes people cringe. At Anderson, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't forget to tell us you've heard about us at Right Path Real Estate.
Wow.
Yeah.
Really?
Mm-hmm. Yeah. Yeah, so we're going to have to figure out a workaround on that.
If you're not familiar with Quest
Yeah, that's huge.
IRA,
Yeah.
let me
I mean, is
tell
that
you
kind
what
of
you're
disclose any
missing.
kind of confidential
We've got
information
free
if
weekly
we talk about it?
educational classes,
No, not at all.
networking
Okay.
opportunities,
Yeah, because like
ability to tap
I mean,
into
we've
trillions
made
of dollars
wholesale
worth of
assignment
real estate
fees.
investing deals.
Like the first wholesale deal we ever did was $47,000.
Right.
Yeah, we got a property under contract for $70, turned around and sold it for $117.
Right.
And it was net worth that was buying it. And so I remember talking to the guy at net worth and said, "Do you care how much we're making?" He goes, "Man, I don't care if you bought it for $1 and you're making 100." He goes, "In fact, I hope you did. You know, hope you're making $116,000. $999." And I said, "No." I said, "We're making 47." I said, "If you don't care, then we'll do an assignment. We won't do a double close. If you care, if you tell me you care, then I'll do a double."
They don't care.
Yeah, of course, right. And so he goes, "Man, the property's worth 117 to me just as it sits." I'm like, "All right, well, so
sold."
Yeah, right. But they weren't using a lender; it was an all-cash deal, right? So, yeah.
You know, net worth, they have their own cash lender.
Mm-hmm.
You know, I mean, Tom
Yeah, of course,
Kinney.
right.
I mean, so it's just a
Right.
yeah,
I mean, as far as we're concerned, it's all cash, right?
Right.
I mean,
Yeah,
as far as the
that's
seller,
right.
yeah.
You know, it's
I don't care what they really do on their side.
Right.
As long as there's cash in escrow,
Yeah.
it's closing.
Maybe we discuss that too.
Yeah.
What is cash?
Yeah.
In a mortgage situation or in a sales contract, what is cash?
Yeah.
If you take a loan, is it cash? Yes, as long as it's delay closing.
Right.
Is business 11
Yeah, that's a good point.
I love your music now.
Yeah, it's all Nikki.
Nikki, good job.
Nikki does a great job.
Thanks. All right, gentlemen.
Because she's a
hot
brick
mics.
house.
I know, right?
Brick house.
All right, stand by. Get it together.
All right.
All right, guys, hot mics.
Hey, welcome back. Right Path Real Estate Radio. I'm joined live in the studio with Ashley Patten. He's with Patten Law Firm. That's plfpc.com. plfpc.com. It's also Texas American Title, 713-621-5808, 713-621-5808. So we were talking during the break about some title issues.
Right.
So we did a closing yesterday, and what it was, we were doing a wholesale, and we got a property under contract, and the way there's two ways to do a wholesale deal, right? We could close on it, actually buy it,
right,
and then turn around and next day or the same day we could turn around and sell it, and that involves two title policies, but you know. To me, it's a little bit like I buy life insurance today, and then I buy a different life insurance policy tomorrow.
Right.
I'll and I cancel the first policy. The second policy really kind of cancels out the first policy. It replaces it, right?
Right.
So is there ever a scenario that if I own a property for 30 minutes, right, or maybe 3 hours, or even 3 days, and then I sell the property to a new buyer, is there it's that new title policy that will always have the claim on it, right?
That's correct.
There's no way you won't go back to 3 title policies ago and file a claim. In other words, there's no risk to the title insurance company there's ever going to be a claim on those previously written title policies. Is that correct?
The only time that you could have a claim, and I've seen this happen, is with the disclosures.
Right.
So seller, by law, you're required to disclose the property.
Correct.
So you buy the property, you get the disclosures, then you turn around and you hand those disclosures to the end buyer.
Right.
Now, the end buyer, if there's something inaccurate disclosures, because your property disclosures are going to mimic
correct
what was given.
Yeah, because we don't normally know what's going on in the property. Right.
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 And then, so if something's not disclosed
Yep.
for your seller,
Yep.
and it passes to you,
Yep.
and then you should have known about it, even though you only walked the property
Right.
one time.
Right.
You will be in a lawsuit.
Yep.
Because the only way they can get to the seller is through you. And so
Got it.
They'll sue you. You have to bring in the seller, and now you got 3 ring circuits. But other than that, there's really no risk of claims.
So we actually had a situation similar to that one time, that we bought this house, buy and hold. We did a small remodel on it. We turned around and sold it. Seller had disclosed to us that there was previous foundation repair work done. We didn't do foundation work. It was a hectic week. For whatever reason, in fact, I won't throw LT under the bus, but
poor LT.
Yeah, but he was feeling. He goes, man, I forgot. I mean, he just honestly forgot to put, because I'm thinking, okay, I did this, and this. Did we do foundation work? No, right? And we do a lot of properties, and that's one of the few times we've ever missed. So then the buyer found out about it and wanted to create a big stink. He basically, what he wanted a refund of some portion, and he wanted us to make an offer to him. And the more we thought about it, Jason and I were talking about, this is a really great house. And the buyer was essentially saying, well, if I'd have known that had happened.
Right.
Now, you could walk the house, and everybody knows what a concrete patch, and this guy has walked plenty of houses. He's got, probably 25 or 30 rentals, so it's not like he's ever walked a house and go, what's that square piece of concrete that, doesn't match all the... It's a foundation pier, right? Everybody knows that. So I know he walked the house, so it's not like he didn't know. However, it's still our responsibility to disclose. Not saying we didn't do anything wrong. We started thinking about it like, hey, you know what? What are his damages? Really? I mean, there is no foundation problem. The fact that his previous, and what he was trying to claim is, I would have never, ever bought the house because I don't like buying houses that have foundation repairs. Okay, great. If that's your philosophy, that's fine. My philosophy is, hey, every house in Houston has either had foundation issues or is going to, right? I mean,
that's right.
It's really rare to find a house that doesn't. I mean, because our soil, it moves.
We're the Bayou City.
The foundation moves, right? I mean, in fact, it's even designed to move, right? So the question is that failure? And just because it's been repaired doesn't mean that it's broken, right? It's been fixed.
That's right.
It's like having a faucet that breaks or a refrigerator that breaks. You replace that, it's fixed, right? Our solution was we came up and said, hey, we give you 2 choices. Choice A, keep the house and go away. Choice number 2, we buy the house back for exactly what you paid, plus all your closing costs, make you 100% whole. We basically reverse the transaction, right?
Right.
That's it. That's your choice. He goes, well, I want money. Hey,
I mean, you don't get money.
Right. A or B. Right. And if we're offering that, if we're offering to make you 100% whole, we'll pay for your survey costs that you paid for. We'll pay for your inspection costs that you paid for. We'll pay for all your clothes. You bought the house for, let's say, 115, but you're actually like 119 out of pocket, because of closing costs and all that. We'll buy it back for all of that. You're out. A or B.
Right.
Here's your choice.
What was his choice? What was his answer?
Guess what?
He took the house.
Of course he did. It was a great deal.
And he put his head down between his legs, kicked the can, and says, man, I thought I could have made something for that.
Right, of course, yeah.
Which a lot of people get scared.
Yeah,
a lot of people get scared because they think of litigation. They're like this big 800-pound gorilla coming after them, which a lot of times is not that way.
Yeah.
Because the plaintiff has also got to spend attorney's fees.
Of course, right.
Unless you're involved in a car wreck.
Right,
And then it's just like the contingency lawyers are everywhere.
Right. Well, you look at most of these situations, and no, I don't know very many attorneys that are going to take any of these deals on contingency. I mean, it's just not going to happen.
They're too labor-intensive, and attorney's fees are something that, even if given, they're hard to collect.
Yeah, of course.
Because suing an individual in Texas is, great. You get a judgment.
Yeah, right.
Now what?
Yeah, do they have anything you can go after, right?
Right.
Yeah.
Everything's protected.
Right.
Their house, their furnishings, their 401k, their
car,
wages, their cars, their gym equipment's even protected. So,
Yeah, everybody's got to have a gym.
So, some people in Texas don't use it though.
Yeah, right. So you know, you can call your stereo your gym equipment, right?
Exactly.
I need to listen to music when I'm working out. It's part of my gym equipment, right? Got to get creative. All right, so I'm joined live in the studio at Ashley Patten. It's plfpc.com, plfpc.com, 713-621-5808. For all your title needs, for all your contract needs, not drawing up contracts, but reviewing contracts, right? Or you'll drop contracts if it's related to real estate.
Yeah, periodically I will, but for the most part, you have a contract that you want it reviewed, I'll do that free of charge because it's a I do real estate, you know. I don't do transactional work, and so
you don't want to be in the courtroom if you don't have to.
No, right. Unless it's just I will go so far as to represent in somebody's interest up to the point to where I have to wear a suit and tie and show up in courtroom or write a demand letter.
Do you own a tie?
I do. I just got married, so I had to buy a tie.
Okay, good for you.
So I own 3 ties now.
3 ties?
3 ties.
Wow. All right. All right. That's great. So what do you see? What are some of the biggest differences in the new TREC contract that a new investor needs to be aware of?
You know, basically the new TREC contract, it talks now about how before the old TREC contracts, the biggest change is the old TREC contracts spoke about if you're putting on there now, obviously if it's a cash deal, you don't have this option. But if you have the third party finance and addendum,
right?
If the lender, the buyer has X many days as a fillable blank there, like usually 14 days I see plugged in there. So the buyer has 14 days to qualify based on its financing, income, credit, etc.
Yep.
And then the lender at any time before the closing can cancel the deal based on if the property doesn't meet its appraisal, if the property doesn't meet its insurability requirements, and or lender repairs. And so what was happening before was basically is the lender could just save their clients, and then on the day of closing, the seller's like send an email saying, "I'm sorry, we canceled this contract. Here's a lender letter," and all the earnest money gets returned to the buyer. Now there's a provision which eliminates a lot of that because then it has to meet within a certain criteria that you can select.
Oh, okay.
And that's a huge
advantage
benefit
to the seller.
That's a huge advantage to the seller.
I like that provision a lot. So in terms of backing out at the closing table, I mean, I know you see it happens every day, right?
Right.
Is it more on the seller side not showing up to closing, or is it more on the buyer side?
Well, immediately as time gets closer to closing, it becomes more on the buyer.
Okay.
But usually what happens is the contracts open up, and if the seller's going to cancel, they're going to cancel the first 3 or 4 days.
Got it.
And then as it goes more, but the onus is on the buyer. So if the contract terminates, the buyer is got the presumption of being at fault because the seller's only duty is to deliver the deed once he receives the money.
Right.
Or she receives the money, or it receives the money, depending on
But if the buyer's ready, willing, and able to close at the title company right then, like, hey man, we're expecting to close, and shows up to the closing table and all that, and the buyer hasn't shown up and not answering his phone, you see that, right?
You mean the seller.
That's what I meant. Yeah, the seller's not showing up. I mean, you see that on the.
We've seen that a few times. Yeah.
Yeah. So, but I would agree on the retail because especially when like if you're flipping a house, we've got 2 transactions when we go to buy and then when we go to sell. So on the sales side, we're never going to back out when we're selling a house at retail, right? Never, ever, ever are we going to back out. But we've seen situations where the buyer's backed out, and most often it's been because they didn't qualify for their financing. At the last minute something happened, and they, it was discovered that this person was self-employed. They never disclosed that, and I'm like, why didn't the mortgage company not know that?
Right.
Way early in the process, right?
Or they bought their furniture before they closed the loan, and so the lender re-pulled their credit, and lo and behold,
here's $40,000 of furniture there, right?
Knocks them out of their
loop. Right. Changes their.
That's happened on at least 3 occasions in my office.
Yeah,
I mean, and I could just see the loan officer fuming because
I told you not to do anything. Right.
And the client's like, well, I thought you said I couldn't buy a car or something big. This was only furniture.
Yeah, this is not big. Yeah, it's only $5,000 of furniture. Yeah.
In this case, it's $49,000 worth of furniture.
Holy smokes!
He's like, well, I was only like a bunch of small tables and lamps and sheds and just he's like,
nothing big.
I bought a lawnmower. I'm like, what kind of lawnmower did you buy? It's like one of these big old
John Deere's.
Yeah. So it's just like it's one of those things where it's just it's amazing. But
1 minute.
then of course the seller, if the seller defaults, sometimes if the buyer wants to enforce specific performance,
right,
they don't have to show up being ready, willing, and able. They actually have to go through the funding.
Yeah.
And so they've got to send money because at least 4 or 5 occasions that I can think of in recent memory, the buyer ended up wiring us money, only for us to return the wire later on in the afternoon when the seller didn't show.
Got it.
And that was done to show he was ready, willing, and able because, the seller's answer always is, hey, I didn't get the money in my account, so I didn't have to show up at the title company.
Well, you don't get the money in your account until after you show up in the title company.
Oh, that's right.
Right. I mean,
until you sign the document.
You don't know that it wasn't there because, we typically, when we're ready, willing, and able, if they don't show up until then, because our lenders are always ready to fund as soon as they get the documents, things like that. So if you can show, hey, we had lending documents already prepared, we had all of that done, we had the lender in place, I would say that we could still make a very strong argument, even though that money didn't get sent into escrow at the title company.
Yeah, and I'd say that would be the alley-oop, But if you want the slam dunk,
right,
you wire the funds.
Yeah, right.
It just depends on what kind of...
how strong you want your case to be, right?
How strong you want your case to be.
Hey, I'm joined live in the studio with Ashley Patten, PLFPC.com. Give him a call, 713-621-5808. Thanks so much.
Tom, thank you again for having me.
Yeah, man. Always enjoyed it.
Man, I love the drill shop.
Mike's up.
How do we do a workaround on what happened yesterday? You need some time to think about that?
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties?
If we can
Jet
get
lending will
10%
help
of
you
it
purchase properties quickly
if we can get
with
10%
as little
of it,
cash
if we
out
get
of pocket
10%
as
of it,
possible. Jet
now,
lending also
the
sets up
seller-
a repair escrow fund to help you with repair costs. Jet lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
The sales price here, and that person's not buying at the higher price. Net Worth wasn't buying at 117.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders. The agency for that is Benchmark Insurance Group in Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com.
Yeah. Right. Okay, cool, man. All right, thanks, man. See you. Bye.
Or online at benchmarkbroker.com.
You found or inherited.
You got 2 minutes.
All right, cool.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, Mr. Perry, here we go. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Want to take a few minutes to say that, if you look at the 25, the rule of 25, and you realize that, hey, I don't really have enough time to save 25 times the annual income that I want to make on an annual basis, then there is a way to catch up that's not the stock market, that's not Bitcoin, that doesn't involve the risk. And what you owe yourself is the opportunity to take a look at how does real estate compare with all the other things that you could do. When you look at that there's more millionaires that become millionaires through real estate than any other vehicle, then you go, why isn't my portfolio exposed to real estate? And I know what a lot of people say, well, I don't want to be a landlord because I don't want to get the phone calls. I don't want to get the headaches. You know what it really is it's a lack of information. It rarely ever costs anything to take a look. And what I'll tell you is what you don't know is costing you a better future, a better retirement. So why don't you plan on finding out? Go to rightpathrealestate.com. That's rightpathrealestate.com. And register for one of our free events where we talk about what are the differences between investing in real estate versus other investment vehicles. I mean, imagine if I could tell you that there was an investment vehicle you could buy and leverage without a risk of it losing value. I mean, is there always a risk? In any investment, there's always a risk, right? But you can mitigate that risk with things like insurance. Imagine if you could buy insurance on like the stock market, and people say, yeah, you can. It's called options. And yes, you're right. There are options. However, what kind of risk would you be taking if you felt like you could make a 35 or 40% rate of return in the market? Wouldn't there be a lot of risk that goes with that? So in real estate, we can show you how you can make 35, 40% or more over year, calculated over a 5-year period, where you can double and triple and quadruple your money over the next 15 or 20 years. I mean, it's an incredible opportunity to play catch up. You can do it in 5 years, 7 years, 10 years. You're much closer to retirement than you probably think. So go to rightpathrealestate.com, register for the event. Jason and I will be in the studio tomorrow. So thanks for listening, folks. Right Path Real Estate Radio.
All right, Tom, have a good one.
Thanks, you too. Bye-bye.